Gotta go. Yeah, I'll call you back. I'm with that realtor lady.
Hi, I'm Michele Replogle, and I am the host of the Realtor Lady podcast. And this podcast is an exploration of the real estate industry with the people who actually work in it. I talk with real estate agents from all across the U.S. We go over the similarities and the differences in our markets, all with the idea to better inform and give people a better idea of what's going on in the real estate market as it's changing. I also talk to vendors, lenders, and people who have other roles in the real estate community, all to better give you an idea of what's going on. Think of it as kind of like real estate commentary instead of sports commentary. And if that's something that interests you and you like to follow the real estate market, tell your friends you can't talk right now because you are with the Realtor Lady. Hey there, welcome back. It's Michele and you are with the Realtor Lady, and I have not had someone live on my podcast in a very long time, so I'm super excited. I somehow managed to talk this nice gentleman into coming on and explaining mortgage rates and what they mean right now and where they're going and some things we can do about it. So welcome, Brian.
Yes, thank you. It froze a little bit. Can you hear me okay?
Yeah.
Yeah, no, thank you so much for having me. Brian Dean, local mortgage banker, been doing loans since 1997. I have a background in wholesale mortgage where I used to call on mortgage companies, and then I became a vice president of production where I ran operation and sales. So I have underwriting background, dealt with hundreds of purchases because
What's
when I was back in the
underwriting?
wholesale. Underwriting is when we put a loan package together. An underwriter looks at a file and reviews it. They check your income, they check the collateral, which is the property, because a bank owns the house with you until you pay it off. And they look at credit, that type of thing. They well, just look at to make sure that the chances that you're going to pay that loan back, basically, and that property in particular is financeable.
Awesome. So we were going to start just with mortgage rates are not the Fed rates. So if you can explain that, I honestly get confused sometimes still too. So if you could just educate us all on that and remind us what that all means.
Yeah, no, that's a great question. So the Fed rate is think of it like a 1 day rate. It's a very short-term rate. It's a rate that um, credit cards, auto loans are based on. It's like an overnight rate that the banks borrow money at. That's like a 1 day rate. Your mortgage rate is a fixed rate, a 30-year term, which is tied to the bond market. Typically, what happens when the Fed raises rates, mortgage rates actually go down because when it's almost like a teeter-totter to the stock market, where the stock market doesn't like when the Fed raises rates because money isn't as available. So people put that money into the bonds, which when bonds are tied to the mortgage rates, I don't want to get too
I know.
technical, but yeah, it's like a teeter-totter. It's normally the opposite, but right now mortgage rates are higher, even though they're 30-year and not the Fed rate, because inflation. You want to talk about that for a little bit?
Yeah. So
Yeah.
why is it? Yeah. So my understand. I mean, because I was watching the Fed rate go up, and I was thinking, okay, that's okay. Mortgage rates are going to go down. The bond
Mhm.
market will, rally, and it didn't really happen, or it
Yeah.
did. I don't understand why it went that way.
Yeah, and that's why it's funny because it's on the other side when the Fed lowers rates, people call me and say, "Hey, the Fed lowered rates 1/4%. Can I refi and get a quarter off?" It's like, no, it actually the opposite because people pull money out of the bonds, put it in the stock, and then mortgage rates go up. But to answer your question, what's going on now is mortgage rates are tied to bonds of fixed income for 30 years. Um, if you're locking up that money for 30 years, for example, if you had where rates were, not too long ago, if you had a rate at 3%, that investor now has that vehicle that's going to pay him 3% over 30 years. Well, now that rates are 7%, 7.5%, that bond isn't worth as much because everything costs more. those dollars don't go as far. So that bond is now worth basically less than 50% of what it was less than a year ago. So therefore, bond prices have to go up to make it desirable for people to lock up that money for 30 years.
Okay.
If that does that make sense? Or
So the 3% guy is happy or unhappy?
unhappy now because his bond is worth, I mean, if we did it in even numbers, like if say you bought $100,000 bond at 3%, it's
Right.
paying you $3,000 a year. If rates go to 6% and now they have to sell bonds at 6%, he's not happy because his bond is only worth 50%. If he wants to sell that, he has to sell it for 50% of what he bought it for. As inflation comes down, it goes the other way, which inflation will peak, and we can talk about that if you want.
Sure.
Sooner than later, that is when rates will start to go down because long-term investments like bonds don't like inflation because your money doesn't go as far. You're locking up that money basically in that example for that period of time.
So, okay, inflation. So let's
Mhm.
go there. Um, but what do you see happening?
So inflation, as they raise rates, they're trying to take money out of the system. When you have inflation, you have too many dollars chasing fewer products, which dries up, supply and demand.
Yeah.
That's why businesses don't put stuff on sale if they're selling it anyway, right? So you get cost of goods. A lot of it's just from a COVID, the amount of money they put into the system. It's out for discussion if they should have backed off sooner, but I think we're all, just paying the price right now because there was all this money available. Inflation is based year over year. There was a headline that came out yesterday that says we're at a 40-year high, when actually, if you dig into the numbers, we've actually kind of passed the peak, they think,
Hmm.
because, I can show you a graph, but in a nutshell, inflation was low in June, July, August, September last year. October of last year, it actually jumped up. So when they came out the numbers yesterday with what September's numbers were, it looks like we've gone up. Well, that's because that replaces the prior year's numbers. So since October of last year was high, when October of this year comes out and replaces last year's number, which will happen in November, a lot of people with a crystal ball, as much as you can have one in this market, are predicting that we'll pass that peak, and you'll actually see inflation year over year. They call it going down, and then with the raising interest rates, I think it's starting to kick in, and that will bring inflation down, which will bring interest rates down. Hope that's not confusing.
Well, the hard part, I think, for everybody to understand, though, is from my perspective, is there's still a lot of cash running around purchasing things, and a lot of cash still buying things that, well, they're probably trying to tamp that down and try to even it out. There's still so many people with money. There's just so much money. Um,
Absolutely.
it it I keep telling people I really don't think this is going to be a big bad recession. I think it'll be short lived, only because there's so much cash coming behind it that may hold back. My husband's
Uh,
an
Absolutely.
industrial electrician who works for a lot of very large companies in the valley, and he says they're holding off on jobs not because of money. They're just waiting to see where things are going to go. They're just
Yeah.
waiting. It's
Yeah.
not because they don't have it. Where before it was because they didn't have it. I mean, it was a desert.
Mhm.
So, what are your thoughts on that?
Yeah, I definitely I see that. There's still a lot of money, still people that have a lot of money in stock that want to buy homes. A lot of people want to come to our side of the mountain, Santa Cruz County, and there's still low inventory. You've got a lot of people that had low interest rates that they don't want to refi, they don't want to move. So it's just the way. Sorry, I got a call coming. Let me turn that off. Um, it's just the way it is, and I think the smart people know that rates will come down. There's a saying going on right now. I'm sure you've heard that
Oh no,
says
don't say it.
yeah, right,
Don't say it.
yeah.
Date their rate
Yeah,
and
yeah, marry the house and date the rate because people. I had somebody tell me the other day that people are like animals; they follow the herd. So once rates start coming back down, it's going to go crazy again. You're going to be back in the bidding wars where somebody who's smart would say, let's buy the house now, knowing that rates are going to come down in the future, and then we'll refi it down the road. But at least you're getting
Well,
it
there's a
now.
couple things to that. First, what I'm seeing firsthand is buyers are able to fall in love with a house and make an offer and go through the process. There is a kind of a unfolding of the process that they get to actually do in this period right now. They get to ask more questions. They get to do more discovery. They get to have more contractors come look at the house. Uh, there's more negotiation and more communication with the seller. I mean, there's a lot of upsides to buying at this time. And
Absolutely.
if you can get a rate, I've had two sets of buyers that managed to find some. They dug these lenders out of whatever caves they were in and managed to get some very competitive rates. But not only that, they got the house they wanted. That's the other part of it is, when you're out and you're competing against so many other people, you may just get the house that you could get and you may not get the house that you want. So there's a like you said earlier, it's a teeter-totter effect. And I'm working with buyers right now they're enjoying a full discovery process. They get to go spend some time in the house before they remove their contingencies. I mean, there's just this whole kind of like romance with the house again, where before it was just, it was shotgun wedding. You like it, you better, you don't have chance to
Absolutely.
love it.
Yeah, you didn't have time to think because it was a short deadline. I mean, and you and I, both have clients that just gave up. When you write an offer and there's 20 other people only go so long and then they just give up hope. And
I
those
actually
people should
don't.
jump
My
back in
guys
now.
win. Not really.
Yeah. Oh,
No, my
good.
guys win. So,
Good.
but I also talk to buyers about certain in a hotter market, certain agents and certain brokerages that may not be conducive to how you're going to want to do this. So unfortunately, don't go to that open house. It's not it's not directing, it's not being discriminatory. It's just saying that this will get your heart broken. This is a better avenue. And when they did that, then they just kind of had the blinders on and were just going straight down for it. It worked better. But now
It's
they can
more.
actually, they can go look at anything they want and probably have a fairly good shot at it.
Yeah.
But so you see rates going down. Is there a timeline? Do you have any
I'm
idea?
thinking a lot of people, the things that I read, they're thinking towards the end of the year.
Mm.
They're
Yeah,
thinking they're going to come down towards the end. Because like I said, once
interesting.
inflation peaks, you'll start seeing the media and all that starting to say everything's great again. You've also got there's certain political things that happen in November that will they'll be putting stuff on the media about positive and all that stuff, which will in fact be positive because we will pass that peak. Like I said, in October, we're thinking when inflation will start to peak. But rates are like gas prices. They're fast to go up. They're slow to come down. So I think once you start seeing the headlines in November about October and all that, things will start coming down slowly.
Yeah, I would imagine the election will have some ripple
Absolutely.
effect on the economy and how people are optimistic or not. Um, wow, we're just kind of ripping through this. Usually in Christmas time though, or the later part of the year, I always see interest rates kind of tend to go up just a tiny bit. So naturally, so it sounds like maybe January would be a really optimistic time to maybe
Could
see
be.
some good changes.
Yeah, a lot of times people wait to see what happens with the Christmas purchasing about, those numbers come out in January, did, XYZ company meet their expectations of how much sales they were going to do type thing, and then when if it was a bad Christmas, then, they say, oh my gosh, the economy is bad, right? So, or
Oh
what's
yeah.
been happening lately is they've been giving a expected number and then they beat that, but the expected number is so low, of course they're going to beat it, right? So it's how you spin it.
I finally read a Bloomberg article that I had to read it 3 times because I have to say that online journalism is pretty poor at this point, but, it finally was an article that actually worked for this area, and it said, "The real estate market is weird." And I don't know if you saw it, but basically it said, it's going down everywhere, as much as 30% in some areas throughout the country, and then it said midway through, but in some areas it's weird. And what they're saying in my belief is that they couldn't predict in some areas like ours where the inventory would stay so low that the prices stayed high regardless of what the rates did. And that weird was because they couldn't peg it.
Exactly. Yeah. And
Eh,
and we're on an island here because you can't build west because there's water.
Right.
And you also, I know for one, because I was one of the 911 homes that burned in the
Mhm.
CZU fire.
Oh,
And
no.
out of 911 homes, I heard 12 have been rebuilt so far. So, you know how Santa Cruz County can be with building, it's very difficult. So you've taken those homes out of the inventory. Not all of them, unfortunately, will be rebuilt because of the cost of rebuilding and under insurance and county rules and red tape.
Wow.
So that's really going to have an impact on our supply and demand. Also, myself as being a homeowner, I'm now renting a house. I'm taking one house out of the rental pool that a renter would normally have. Well, if until my house is rebuilt, I'm taking one of the rentals, which means there's fewer rentals, which drives up prices, which makes it a reason to um, buy a house, basically. Because and I just thought of a side note with rates. I posted something on my Facebook the other day that people complained about wanting to pay a high interest rate to buy a house, and I said, well, your rent is 100% interest. So on a side note, I just thought about that because you're paying your landlord. But anyway, sorry,
Good
got off
point.
track there. Yeah,
So, well, let's talk about that for a quick second.
yeah,
So what are you doing? Are you rebuilding?
yes, yes.
Okay. And
I am.
you're Bonnie Doon, where are you?
I'm up the golf course in Boulder Creek,
Oh,
and what
okay.
what we're actually on sewers up there. I think is what our saving grace was to get past the whole septic tank environmental health type thing. There are people that are not able to rebuild because of access, because of the roads, the width of the roads. There's a worry of debris flow in some areas where not so much in our area because although we had the fire, as bad as it is, it's still a natural thing. We just decided to put houses in the forest, right?
Mhm.
But the redwoods and stuff are still very green in a lot of parts. So our hillsides, I don't think will really have the mudslides like some areas have had after a fire, but it's kind of a one size fits all. Maybe it's just you know, counties protecting themselves that they want people to put in, hundreds of thousands of dollars of retaining walls in some area in order to rebuild, and who's going to pay for that? And it's just devastating for people. So,
What's the timeline that when your house will be done?
I just did the second phase of our foundation, so I don't know. I hear horror stories on how long it takes to get windows, how long it takes to get doors. I hear they are getting caught up because building as a nationwide has slowed down a little bit, so I'm hoping more products will be available. But I'm thinking 6 months, nine
Okay.
months, oh, at the most, hopefully by next spring. Depends on the rain too. Um, we all pray for rain, but I'm hoping I get my roof on first, but can't be.
There's so many
Yeah.
factors with the fires. I know there's people that, th they bought their home so many years ago, and they weren't really there wasn't a lot of equity there anywhere, so, their insurance payout's not gonna be huge for some of the homes in Bonnie Doon, or their lots were small and carved out, and so they don't have enough to really do some of the stuff they need to do. I know personally of somebody who just he's 90 years old. He said he didn't think he'd be alive by the time they'd given the permits.
Yeah, I know
And
it's.
there's a lot of that up there, and especially, in those areas where people retire, and it's just
Yeah, it's stressful. I mean, it's a doing loans is a full time job, and then rebuilding a house is a full time job too, because there's just so many things you never. I was joking with my wife the other day. I said Like if you want four windows and somebody says, "Do you want the outer windows to open?" You're like, "Okay." Well, then you're thinking, "Well, is that going to be weird to have screens on just those out two windows and not if you bought the house, you never would have paid
Hmm.
attention, but because you're having to focus on it, you
Hmm.
know, and I overthink everything to begin with, so it doesn't help. But
And I
no,
underthink it when the project's done. I'm like, ah, why didn't I do it this way? Because
I
I just
know.
said, go get it done. Go get it done. I'm
Yeah.
busy. I can't think about this. So yeah.
Yeah. And you get that, like I see there, or like the size of the bedroom, you're like, I wish we would have made that bigger, but you can't. You just got to roll with it. You're never going to get everything because there's so much to think of,
Oh
right?
no, no, no. Bedrooms should be
So,
small. Your living space should be large.
well, there you go. That's true. Yeah, you spend more time in the living.
Real estate wise, where you're going to spend the most time. Now, the caveat is if you're going to spend a lot of time in your bedroom, okay, that's different. If you're a bedroom person, that's
Yeah.
different. But family wise and everything, make sure your living space is larger
Yeah.
and your
Good. Well,
bedrooms are smaller.
thanks. That's a
There
good
you go.
point. I feel better now. And I tell on a side note too, just so you don't go through what so many of us have gone through with the fire, check your insurance. The difference of take your square footage, multiply it by 750 a square foot, and make sure your insurance is for that because, you
750 a
know,
square foot. Okay.
yeah, I mean that's probably on the high side, but it's better to have too much than not enough insurance. I have, a lot of us probably would have had enough, but you add COVID, you add inflation, you add the fact of supply and demand. There's only so many contractor, and so many people are now chasing the same amount of contractors as before. Talk to your agent. I'm not an agent, but you'd find the difference in the premium is so minimal. It'd be silly not to do it. So
Good to know. I want to do a little segment on earthquake insurance at some point because I've had more
good
clients ask me
advice.
about it because it's being offered to them now.
Hmm.
It wasn't offered before. And living through the earthquake, I still don't see a lot of value in it, but
Yeah,
that's another
deductibles
thing.
and all that.
Yeah, yep, yep. Okay. So we've covered it. We think rates might ease up a little bit, maybe the end of the year, beginning of the year, we might see some relief there. Um, Before we move on to seller buy downs, what do you see next year looking like?
For interest rates and real estate, or yeah,
Yeah, yeah.
again, I think rates are going to go down. Historically, every time the Fed raises interest rates, that we go into a recession, they're raising rates faster than they ever have before. The definition of a recession is two negative growths, which we had the last two, but they're kind of changing definitions of what it is right now. Um, it's a natural thing. It's not bad. The last recession was the Great Recession, which was caused by bad lending, right? And that recession was caused by the housing. But historically, values hold, especially in our area. I think that, I think values are going to hold. I think rates will come down. I think there will be a recession. It's natural. That's pretty much what they're forcing to happen to get inflation under control. They need to. I mean, even the Fed said they know it's going to be painful, but they have to do it because it's not as painful as inflation. So it's a particular thing. It's a normal. So I think rates will come down. I think that's really going to start the buy-in frenzy again once
Okay.
people learn about that. So
I expect next spring to be pretty crazy again.
yeah, yeah.
Um, One last thing before we move on. In Santa Clara County, they've been really saying their prices have gone down. And we haven't seen it here. Is it just because of the sheer amount of homes that they have there and the amount of people that kind of move there? I mean, there's a lot of people that move from smaller homes or first home to that. I mean, there's a lot of move up buyers there compared to here. It's so hard to move up here. But we
Yeah.
haven't, we usually follow them, but we don't seem to be following them. We seem to be a little bit of an outlier in terms of prices. What are your thoughts on that?
Yeah, I think we were always like an overflow. And somebody told me once, they said, Santa Cruz County was like the last, back then affordable beach town. You look at LA, look at Santa Monica, Malibu, and there was always this Santa Cruz was always kind of behind the Bay
Mhm.
Area. And
Mhm.
now the Bay Area is so much more desirable because of the people telecommuting. It's not that bad a drive. Companies are making people come back, but maybe it's 2 or 3 days a week it's an easy drive. 17's got a whole lot better. Bear Creek's got a whole lot better.
Yeah.
Highway 9's got a whole lot better. So I think we're kind of on our own island. Um, I think you could have a little dip in value, but you got to look, you can't look, month by month. You kind of got to look at the quarter or a little bit longer, because when rates go up, people have a knee-jerk reaction. But then it runs its course.
I've worked with a few people this year that came over here because they had gotten priced out of other
Hmm.
areas. We're still considered more affordable.
Absolutely.
So, talk to us about some things that you can do, seller buy down programs. What are things that people could do right now if they just, when just to interject my own story, I bought when I was ready to buy. It wasn't a great time. It was like 1994.
Hmm.
It wasn't a good time at all. It was a really wild time, and I think we ending up getting up to almost 11%, but our house was only 220. But even
Yeah.
so, it was super scary, and it kept going up. We had an adjustable rate that just kept going up, and it wasn't a great product that we had gotten into. But I was ready to buy a house. I didn't really care what the market was saying. I didn't care. So what can somebody who's just like, no, I want to buy a house now. You know, damn the torpedoes. What can I
Hmm.
do?
Just find a way to make it happen. I say, the best way to uh, ride inflation is real estate, right? So it's a great place to put your money. Um, there are some, shorter term financing that might lower your payment. That's a discussion I like to have with people, depending on how much money you put down and what that risk is compared to what a 30-year would be. But I've been doing a number of seller buy downs for people, and we can,
Yeah.
segue into that if you
What's
want.
that? Yeah. What is a seller buy
So
down?
seller buy down is, it's basically you're buying the interest rate down. So a lot of times when somebody's looking for a loan, they hear a rate, you'll hear, you know, 7% but then you find out they're charging you points. A point is a percent of your loan. So if you had an $800,000 loan, 1 point is 1%. So it's $8,000.
Right.
I'm telling people, don't pay points, because I can't guarantee you, but I bet you money that rates are going to come down in the future, and we'll look at refi when the time's right. You might not want to do it right when the rates start going down. You want to, hopefully get close to the bottom, because it costs you money to refi, and nothing's for, there are no point refis, but nothing's for free, right? So, but we have that conversation when the time comes. But if the seller pays the points, it's a great thing, and it's really helping buyers. Like, I've had people that, back in the bidding war days, where they couldn't get a property, they were pre-approved to a certain amount. Well, now the interest rate's gone up, that they've lost their buying power. Now they don't qualify for that much. They have to, look for a house 100 or $200,000 less. The seller buy down is a way to have the seller give them a credit to buy their interest rate down. And interest rate actually has, and I'll show you here in a minute, has a bigger impact on your payment than how much you're paying for the house. So much so that I had somebody that wanted to put an offer on a house they couldn't afford, they couldn't qualify for it. Should say afford, couldn't qualify for it for an underwriter standpoint. So what we did is we actually increased the price, asked for that money back to buy the
Oh,
rate
right.
down, and it was a lower payment, and they qualified for the house even though they were paying more money. It's good for a seller if you have a seller. Um, they can net more money, because since the rate's more important than the price, they can give it a credit and not have to discount as much to arrive at the same payment for a buyer of their home. I'm going to show you. I can
Yep.
give you an example here. Let me see if
Sure.
I can
Yeah.
share my screen. Can you see that okay?
I don't see it. There you go.
Yep, there we go.
Okay.
Okay. Yeah, so I'll highlight in yellow. So what I took in this situation, this was a
Maybe
million
you can see if you
dollar.
can make it bigger. It's pretty small.
Let me.
Check view.
You doing it on your side, or let me see. Um,
I think you can do it on your actual,
Let me see here. Zoom.
yeah, there you go.
There we
There you
go. Is
go.
that
Yeah.
working? Is that good
Uh-huh.
size?
A little bit less because we lost some of it. Just one.
Okay.
Yep. There.
There we
Perfect.
go. So, the disclaimer: rates are always changing. You always want to get a loan estimate and talk to your lender. But this was just a snapshot of an example at this particular time when I did this report a couple weeks ago. But in this case, it was $1 million purchase price.
Mm-hmm.
The rate at that time in this example was 6.5%.
Mm-hmm.
A total payment, which consists of your principal, your interest, which goes to the bank, and then you have property tax, which is
Mm-hmm.
based at 1.25% of your sales price divided by 12, and I'm estimating $200 or $2,400 a month for insurance. That total payment is 6248. See that there?
Mm-hmm.
In this situation, the seller was offering 20,440, $440, because that was like the sweet spot, which would get the most bang for your buck. If the seller was to lower the price by that much, the purchase price would be $979,560. If we kept that rate the same, the buyer only saves $124.64.
Hmm.
But if we took that same $20,000, left the purchase price at 100, at this time in this example, it would buy the interest rate from 6.5 down to 5.5. The buyer now saves $514 a month. And to show why what I mentioned earlier about how interest rate has a bigger impact than price, the seller would have to lower the price $101,696 down 898,000 to
Mm-hmm.
arrive at that same payment. So it's a win-win because let me clear up all my stuff here. If you're a seller, it costs you 20,000 or it costs you 101,000.
Not only that, most sellers today have a very large capital gains, and that is also something that people seem to forget. Like they get really tied up in the number that they're going to get for their house, but they don't really think about it on the back end, which I'm always thinking taxes. There's
Absolutely.
there's that
Yep.
benefit there.
And for a buyer, I mean, you could have somebody that was approved for $898,000 and now can buy $1 million house. They just increased their buying power by 100,000 too. Just the power of the rate.
Yeah. Why is this not so popular this time around? It seems to be a very
People just aren't familiar with it.
yeah,
We did them years ago when
we
rates were
did.
higher. Yeah, and there
We
are
did them
some.
routinely. I mean,
Mhm.
we would just write offers like that just routinely, and most sellers would be offering it. Like that was just kind of sellers were very, let's put it this way. I feel like sellers used to participate more in the actual lending and financing process. Now even as an agent, I'm very detached on how the buyer buys. Sometimes I don't even talk to the lender anymore. They
Mhm.
just go get their loan and the title and escrow deals with them, and then we close it. But
Yeah.
before everybody was involved, both agents, the seller, we were all dialed in on how this buyer was going to purchase this property.
Yeah. A great point. Yeah. I mean, it's
Yeah.
it's we're all on the same team. We all want the end result of, the seller wants to close their house, the buyer wants their house, and the agent loan officer wanted to close too. So it's just working together. And I think this just doing this is a great video that you're doing, and thanks for the opportunity to talk to share this. But I think just educating the buyers and sellers is just important to show what to do. I mean, every scenario is different. The rates are always changing because it follows the markets. So that not to say that $20,000 is always going to lower your rate by that much. It's always changing, but it's just buyers and sellers should look for an alternative, whether that's you do the real estate side. So I don't know if it's when you present it to a seller, you say, hey, let's um, maybe ask your lender, say, hey, how much of a credit could we ask for to what would that do for us? Or if you were a seller and maybe you got a low ball offer, you could say, hey, talk to your lender. What if you were to, rather than drop the price 100,000, you offered them $20,000 credit to buy their interest rate down? Or it's just it's a win-win. It just depends on how, I don't want to say how you pitch it, but how you present it, right?
Yeah. I think it's still hard to get sellers' attention on it. I think that, the way things have been for the last 10 years or so, that I think they've just been like, buyers will figure it out. There's lots of people out there with money, and it's like I think the takeaway from this video is really going to be we kind of came together that sellers probably should be a little bit more involved. If they want to get their number, they can actually still get their number. They're going to have to be a little bit more involved in the financial process of the
Yeah.
buyer than they might have been in past years, and that would probably still go on next year, I would imagine,
Yeah.
because rates as we know aren't going to go crazily down. They're just
Yeah.
a bit down. Well, I really appreciate your time today, and thank you so much for this. Is one of the things I love about this podcast is I always learn so much, and I get kind of refreshed on something even I might have already known, but I hadn't touched in a while. And this is so relevant now, helping people understand lending because lending changes. I've been in the business almost 20 years. You more, it, you know. You wake up to a new market every day. You wake up to a new
Mhm.
financial market every day, and you just have to keep up on it to to understand and to be
Absolutely.
productive
Yeah.
in this. Yeah,
And that's why it's
awesome.
so important to work with somebody, like yourself, like, that's great that you help your buyers get their offers accepted, where not to go look and get discouraged. And also your lender. I mean, you can go online and just put in your info and it spits out a rate, but that might not be the best way to go. There's other loan programs, like you said, programs are always changing, guidelines are changing. Maybe you get creative and you do something like that seller buy down. It's all about your payment. Your interest rate is what you brag around the water cooler. Your payment is what you write your check for each month. So it's like, how do you get that payment down? Because that's what matters, right? So it's just being creative and looking at all the tools that we have, the ammo we have, and figure out how to win the war, basically. So
Yeah, I think it's being informed as much as you can, but listening. I back at my buyer's win, not to humble brag, but I had a buyer said, "Well, my friends around the water cooler that kept telling me they're not succeeding and they're not winning. They don't have a house. It's been 6 months and they got one on their fourth tryout." And I said, well, you listen to your
yeah,
realtor.
absolutely. Yeah,
You just
yeah,
listened. You just paid attention. You followed the information. They 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 went and got their information. They verified it with me. Then they made a very conscious decision and they did well. But for people who I hate to say it, but if you've got to find professionals you trust to win in any of these markets. And so
absolutely,
yeah,
absolutely.
awesome. Well, thank you very, very much.
Yeah, thank you for having me. It's been great.
I'll have you again.
Sounds good.
Hey, it's the realtor lady, Michele Replogle. Is there a subject you would like me to explore in real estate or maybe about Santa Cruz? Feel free to contact me. I'd love to hear from you. Or if you'd like me to help you buy or sell real estate, that's also something that I do. You can contact me on Instagram, Live the Santa Cruz Life, or on my website, michellesellsforyou.com. That's with one L. My Facebook page, Live the Santa Cruz Life as well, or check out my YouTube channel, Live the Santa Cruz Life with Michele Replogle, and my email, michelle@michellesellsforyou.com. I would love to hear from you.